Greetings, candidates, and welcome to the lesson. The subject is corporate governance and ethics. This is the first lesson. Now, our lessons in corporate governance and ethics will be based on the CASNEP syllabus. The learning outcomes include number one, that a candidate who passes this paper should apply leadership principles and practices in the context of good corporate governance and ethics. Number two, should be able to apply best practices in good corporate governance and ethics. 3, demonstrate an understanding of the links between corporate governance and ethics and development of different types of corporate governance solutions. And lastly, a candidate should effectively resolve ethical dilemmas based on corporate policy and governing criteria. The general objective of this paper is to equip candidates with knowledge, skills, and attitudes that will enable them practice the tenets of good corporate governance and demonstrate adherence to ethics for enhanced organizational performance and achievement of corporate and strategic objectives. As I said earlier, there are 10 chapters. Number 1 is the overview of corporate governance and ethics. Number 2, theories of corporate governance and ethics. Number 3, board governance models. Number 4 is a topic on the board of directors. Number 5, internal corporate documents. Number 6, governance of risk. Number 7, environmental, social, and corporate governance framework. Number 8, ethical behavior. Number 9, compliance with laws and regulations. And lastly is contemporary issues and case studies in corporate governance and ethics. So we shall be studying all the topics and the subtopics, one topic at a time, one subtopic at a time, beginning with topic number 1, overview of corporate governance and ethics. This topic has 9 subtopics. The first one is defining corporate governance. Number 2, importance of corporate governance and ethics. Number 3, pillars of good corporate governance. Number 4, principles of good corporate governance. Number 5, comparative corporate governance system. Number 6, evolution of corporate governance. Number 7, new models for corporate governance and ethics. Number 8, ethics and the law. Then lastly, universality of ethics. These are 9 subtopics. We'll be looking at each and every subtopic in these lessons. And I expect you to appear in these lessons well prepared to participate in the learning process. Ensure that you take notes, ask questions, and do the assignments. At the end of every chapter, we'll be providing revision questions, which you are required to do before proceeding to the next topic. Now, the first chapter, which is overview of corporate governance and ethics, introduces the concepts of corporate governance and ethics, defining corporate governance as the system of rules, practices, and processes by which a company is directed and controlled. The chapter explores the importance of corporate governance and ethics. It discusses the pillars and principles of good corporate governance and also examines comparative corporate governance systems and the evolution of corporate governance. The chapter also covers new models for corporate governance and ethics. Do you understand? Such as the stakeholder theory, and also sustainability. The chapter lastly discusses the relationship between ethics and the law. And the last subtopic here is the universality of ethics. Now, in this lesson, we're going to just do the definition of corporate governance and ethics, and maybe look at the importance of corporate governance and ethics. So therefore, by the end of this lesson, you should be able to define corporate governance, you should be able to define corporate ethics, and to discuss or outline the importance of corporate governance and ethics. But let us first of all begin with the definition of corporate governance. What is corporate governance? You'll realize or notice that there are two things here: corporate governance and ethics. Let us first of all define corporate governance. What is corporate governance? Now, corporate governance, candidates, refers to the system of rules, processes, and practices. It refers to the system of rules, processes, and practices. It refers to the system of rules, processes, and practices by which a company is directed and controlled. By which a company is directed and controlled. We are talking about corporate governance. Corporate means company. A corporate is a company. So corporate governance is a system of rules, processes, and practices by which a company is directed and controlled. Directed and controlled. And it encompasses the relationships between company's management, its board of members, its shareholders, and other stakeholders, and the mechanisms by which they exercise their rights and responsibilities. And therefore, effective corporate governance aims to promote transparency, accountability, and ethical behavior in business operations, and to ensure that companies operate in the best interest of its stakeholders. It also involves the establishment of structures, the establishment of systems, the establishment of processes for managing risks, monitoring performance, and making decisions that align with the company's long-term goals and objectives. Because every company has objectives, every company has a vision, every company has long-term goals. And for the long-term goals to be realized, then there ought to be rules, processes, and practices by which a company can be directed and controlled in order to achieve the long-term objectives. So corporate governance refers to system of rules, processes, and practices by which a company is directed and controlled. By which a company is directed and controlled. So that is the meaning of corporate governance. Corporate governance. Then we have ethics. What do we mean by the term ethics? Ethics. Now, ethics refers to the principles, it refers to the values that govern human behavior. You understand? Ethics refers to the principles and values that govern human behavior. Ethics. Ethics refers to the principles and values. Refers to the principles and values that govern human behavior. You understand? Particularly in relation to what is right and what is wrong. And it involves the study of moral philosophy, which examines questions of how individuals and groups should behave and what principles they should adhere to and what obligations they have to others. You understand? It is a study of principles and values that govern human behavior, how we behave. It looks at questions of how individuals should behave. It delves into what principles that individuals should adhere to, and also what are the obligations that an individual may have towards the rest of the society. And ethics can apply to a wide range of contexts, including personal behavior, including professional conduct, including social and political issues. It can also vary across cultures and communities, with different groups holding different beliefs, different groups holding different values about what constitutes ethical behavior, what constitutes what is right, what constitutes what is wrong, and so on. You understand? It can also vary across cultures. Ethics can vary across communities. So here we are dealing with ethics basically in business. And in business, ethics plays a crucial role in guiding decision making and also shaping corporate culture. It involves adhering to principles of honesty, principles of integrity, principles of fairness, principles of responsibility, and also balancing the interests of various stakeholders, because a company has various stakeholders like employees, suppliers, customers, consumers, the government, financiers. All those are stakeholders. And companies that prioritize ethics are often seen as more trustworthy, and are more likely to build long-term relationships with customers, with employees, with the government, and so on. So that is what we shall be looking at in the study of corporate governance and ethics. So in brief, that's the definition of corporate governance. That's the definition of ethics. We've said that corporate governance refers to the system of rules, processes, and practices by which a company is directed and controlled. For one to direct and control a company towards achieving its long-term objective, then one has to adhere to certain principles, processes, and practices, which you are referring to as corporate governance. We shall be looking at corporate governance principles as we move along. We also say that for a company to have sustainability, for a company to survive in the long run, then the management has to ensure that the company is founded on good ethics, on ethical behavior. The management, the employees must adhere to certain principles. The principles such as integrity, honesty, fairness, and all that, they have to be adhered to in order for a company to have or to build long-term relationships with customers, employees, and other stakeholders. companies do not operate in a vacuum. When a company is established, a company will need suppliers, a company will need financials, a company will need customers, a company will need the government for licensing and other benefits. So for a company to achieve its long-term objectives, the company will need to rely on the various stakeholders, and these stakeholders will trust a company that promotes ethical behavior, a company that promotes integrity, a company that operates in fairness, a company that is responsible, a company that balances interests of various stakeholders. Such a company can achieve its long-term objectives, and that's why ethics is one of the key areas in your syllabus. All right, corporate governance and ethics. So let us now briefly study the importance of corporate governance and ethics. Importance. Importance of corporate governance and ethics. Now, corporate governance is essentially the rule book for how a company is directed, for how a company is controlled. Corporate governance, in other words, sets the framework for everything from leadership roles to decision-making processes. So why is it important? Number one, corporate governance is important in order to have strong reputation and trust. Strong reputation and trust. Strong reputation and trust. Good corporate governance fosters a culture of integrity and transparency, which then translates to positive reputation that attracts investors, customers, and talented employees. You understand? Because remember, we've said that corporate governance refers to a system of rules, processes, and practices by which a company is directed and controlled. We've mentioned a few of these principles, right? If a company is established, if a company adheres to good corporate governance, then such a company will most likely have a strong reputation, a good name. And a good name is an asset to any organization. It's an asset, just like any other asset. It is an intangible asset upon which the company can use to attract customers. For a company to achieve, a company must have customers. For a company to achieve, a company must employ talented employees. Talented employees are more likely to be attracted to a company that adheres to good corporate governance, because such a company treats employees well, such a company is fair, such a company can be trusted. So that's why it's important for a company to adhere to good corporate governance. It fosters a culture of integrity, transparency, fairness, honesty, and so on. Conversely, weak governance can lead to scandals. Weak governance can erode trust and damage a company's image. A company that has weak corporate governance, such a company is likely to have scandals, because a company operates in an environment that is it's not fair, where there is dishonesty, there is corruption. That is what may happen in the absence of good corporate governance. A company that does not have a system of rules, processes by which it is directed and controlled, such an environment can lead to scandals. Such an environment can erode trust that is essential, trust that is required to attract investors, to attract customers, and also talented employees. And that can damage a company's image. And once that image is damaged, then there will be no relationships, just like personal relationships. Personal relationships are built on trust. If you have a friend whom you do not trust, that relationship may not flourish. Such a relationship cannot be termed as a good relationship. Such a relationship cannot be beneficial, where there is distrust, where a partner has weak reputation. One may not want to be associated with such a partner. That also applies when it comes to running business. That applies when directing and controlling corporates or companies. It's important that a company has a strong reputation and trust. And that can only be achieved if a company adheres to the tenets of good corporate governance. That's number one. Number two, financial performance and stability. Financial performance and stability. Now, effective corporate governance promotes sound decision making, it minimizes risks, and encourages responsible financial practices. And that can lead to increased profitability, stable growth, and strong foundation for long-term success. That's the second reason why effective corporate governance is essential. The third point is accountability and fairness. Accountability and fairness. A well-defined corporate governance structure ensures clear lines of accountability for leadership. It provides clear lines for management, and that reduces the risk of fraud or mismanagement, thereby protecting the interests of all stakeholders, including employees, shareholders, financials, the government, and so on. Access to capital. Number four, access to capital. Companies with strong governance practices are seen as more reliable and trustworthy by investors, and that makes it easier for them to raise capital and secure funding for growth, secure funding for expansion, and so on. Access to capital. 5, sustainable growth. Sustainability. Now, good governance isn't just about short-term gains. It considers the long-term well-being of a company and its impact on the society. And such focus on sustainability helps companies navigate challenges and thrive over the long haul. You understand? So these are just 5. There are many reasons why effective corporate governance is essential. These are just 5 candidates. And it's important to note that corporate governance is the invisible backbone of a well-run company. It's an invisible backbone. right? Invisible. It may not be seen, but it's an essential backbone of a well-run company. That is to say, you cannot have a well-run company without effective uh, corporate governance structures being in place. Any successful company you come across is one that is well grounded, that is well founded in good corporate effective governance, corporate governance practices. Because corporate governance creates a framework for ethical practices. It creates a framework for sound decision making. It creates a framework for long-term success. And by prioritizing good governance, companies can build trust, they can ensure financial stability, they can ensure accountability and fairness, and they can access to capital. You understand? And thereby contributing to a healthy business environment. A healthy business environment. You can also mention a few points in relation to ethics, importance of ethics. Importance of ethics. And just like corporate governance, ethics fosters reputation. It fosters trust, reputation, and trust. Ethical behavior fosters a positive reputation for any company. And consumers are increasingly drawn to brands that they perceive as trustworthy. Do you understand? That's why I say that ethical behavior is an asset. Why? Because companies that exhibit ethical behavior, positive ethical behavior, are more likely to attract customers because consumers are increasingly drawn to brands they perceive as ethical, as trustworthy, and aligned with their values. On the other hand, unethical behavior can lead to boycotts, it can lead to damaged reputation, and also it can be difficult for such a company to attract customers. So that's why it's important to adhere to ethical behavior because it enables a company to be perceived as trustworthy. There is also correlation between ethics and financial performance. Financial performance, just like corporate governance. Financial performance. Now, studies suggest a correlation between strong business ethics and financial performance. Ethical companies tend to attract and retain top talent. They foster a more productive and loyal workforce. Additionally, ethical practices can minimize legal risks and fines. A company that pays taxes, that does not evade tax, that is an ethical organization. A company that is fair, a company that is honest, a company that is transparent, that is a company that adheres to ethical behavior. And such a company cannot attract penalties or risks, cannot have legal risks, and so on. And that improves the financial performance of an organization. 3, stakeholder relationships. Point number 3, stakeholder relationships. A business doesn't operate in a vacuum. It interacts with employees, a business interacts with customers, A business interacts with suppliers, a business interacts with the investors, a business interacts with the public, a community, and so on. All right? And therefore, ethical conduct builds trust with all these stakeholders, leading to stronger partnerships. We are talking about relationships, stronger bonds, stronger partnerships, and a more sustainable business environment. If you are dealing with a company that you can trust, a company that you can trust that they will supply the right quality, the right quantity, at the right time, a company that keeps its word, those are traits of ethical behavior. A company that does not say one thing and do the other. A company that does not say they are packing 10 kilograms and they pack 10 kilograms, that is being ethical. But a company that says they are packing 20 kilograms and they pack 10 kilograms, those are companies that you may not want to do business with next time. So being ethical, a company that is ethical, where employees are ethical, the management exhibits ethical behavior, then they build strong relationships with the stakeholders. Because I've said the company will interact with many customers, with many lenders, many stakeholders. And when a company is ethical, then the relationships will be stronger. And that's what a company needs. A company will need customers who will come and buy again. You understand? You understand? So that's why it's important to have employees and management that encourage ethical behavior. Four, legal compliance. There is a correlation between ethics and legal compliance. Because while ethics go beyond legal requirements, they provide strong foundation for legal compliance. And a company with a clear code of ethics is less likely to stray into illegal territories. An ethical company is a company that adheres to laws, regulations, and rules. And such a company is unlikely to stray into illegal territories. So by having clear code of ethics, a company will be setting a proper foundation for legal compliance. 5, social responsibility. Social responsibility. Now, today's consumers expect businesses to be mindful of their social and environmental impact. And ethical practices encompasses areas like air, environmental sustainability, areas like labor practices, responsible sourcing, and so on. Do you understand? We are talking about ethical practices. Ethical practices includes fair labor practices, that is being ethical to employees. It also includes environmental sustainability, that is being also fair to the external environment within which the organization operates, ensuring that there is no air pollution, there is no water pollution, there is no pollution of any nature. An ethical organization will ensure that it does not pollute the environment, will ensure that it does not exploit the workers, will ensure that employees are treated fairly, fair labor practices, and so on. And that is to say, candidates, that business ethics are not just a feel-good notion. Business ethics are a strategic imperative, and by prioritizing ethical conduct, companies can build trust, they can ensure long-term success, they can also contribute positively to the environment and to the society. So these are reasons why corporate governance is important. I've also given reasons why ethics is important. And in this lesson, we have also defined corporate governance. We've defined corporate governance. We've defined ethics. We've outlined the importance of corporate governance and the importance of ethics. And that is the end of the lesson. You recall at the beginning of the lesson, our objective was that by the end of this lesson, we should be able to define corporate governance and ethics, and also outline the importance of corporate governance and ethics. And that will form the basis of today's assignment. Assignment 1, define A, corporate governance, B, ethics. Number 2, outline the importance of the following: A, corporate governance, 2, ethics. Now, please, when answering the questions, do not refer to the notes. Answer the questions without referring anywhere. Thank you for attending the lesson. In our next session, we are going to study the second subtopic, which is pillars of good corporate governance and principles of good corporate governance. Bye.